This video is sponsored by Cake Wallet, the easiest open source wallet to store Bitcoin, Monero, and Litecoin securely on mobile and desktop devices. When buying, selling, and exchanging crypto or trading for gift cards, Cake Wallet ensures privacy and security, giving you the keys to your coins. What's up, everyone? Welcome back to the Daily Zest again. I'm your host, Randi Hipper, here on a lovely Wednesday. We are midweek. Yes, shutdown happened. We rebooted. We are back. So if everyone could please be so kind, so helpful as to smash these likes, subscribe, and share the stream out with friends, that would be absolutely amazing. Let's get to 100 likes and 100 live viewers. I see the viewers and the likes are ticking up. We need to get it pamping. Make sure you guys are entering that poll. And I want to say hi to some people in the chat. The other miners here. Ovalbor is here. Nice to see you. Bulldog, Dubai Money. Good morning to you. Web3 Fits. Olive is here. Guy, what's up? Emma, Randy, Outcast, David in all caps. Nice to see you. All right, guys. Please make sure you guys smash these likes and share this stream out with friends. I know we lost like a ton of people from before, but it is what it is. We won't be sad. We will just continue going. Guys, please say hello to me. Let me know if I missed you. We got bacon, eggs, and hash in the chat. Chris Hanley is here. How? I want to say Jao or How said hello from Portugal. Hello, my friend from Portugal. I'm saying hello from NYC, another part of the world. It's nice to see you. User 70, nice to see you over there on the TikTok. Steve B is here with the candles. Stacy, nice to see you. Good morning. Vaughn, nice to see you. Ian, nice to see you. Chad, what's up? All right, guys, we have Jerome Powell live at the European Central Bank, so I want to show that to you guys. It's a pretty interesting panel, but of course, while we were down, we kind of like missed a good amount of it. So I'm gonna wait until I see Jerome Powell pop back up on the screen, and then I will share it and everything like that. Let's see. Who else is in the chat? I'll say hi to you guys while I'm waiting for Jerome Powell to speak. Steve B is here. Nice to see you. Patrick DeMar is nice to see you. Oh, 6 foot. Hi from Tennessee. Well, hello. Tennessee is awesome, man. Listen, guys. Also, I want to just say thank you to someone who sent me 1 Litecoin. I got a 1 Litecoin donation. But it didn't pop up on the screen because I shut down. So I do apologize for that. So whoever sent me that 1 Litecoin, thank you so much. You guys know I love Litecoin, and I'm very happy to have one stacked from you. So thank you so much. I appreciate it. I wish I could replay the GIF that you would have gotten, because it was a cool Litecoin one too. If you tip 21, there's a Bitcoin GIF, and then if there's 80, yeah. So if there's whatchamacallit, 20, yeah, all of that, 21, and then 84 for Litecoin, there's a special gift there. Jimmy, thank you, man. I appreciate you, Uncle Jimmy. Danny from the blockchain, nice to see ya. Cool. All right, we're gonna see if Jerome is speaking now. Cool. All right. Is it over? Did I miss it?
What we don't do is say, what shall we do? What shall you do? Because we're all setting the monetary policy for our areas, and that's the law in all of our areas actually. So we don't do that, but we do talk a lot, and I think it's important. I mean, it's important at all times, but it's particularly important in recent times at the moment because we're facing such big global shocks. We've got common shocks. They differ a little bit in terms of their impact and their effect, but there's some huge global events going on that are affecting all of us. So, I think it's, we do talk quite a lot and we see each other quite a bit because it's important we do that. And, we share wisdom on how we're sort of interpreting the things that are going on around us.
I guess we are in a flexible exchange rate world, so we do policies independently. But of course, we exchange information, which is very, very valuable.
Do you think that, Governor Ueda, do you think that they are over-tightening?
No.
Some finance jokes in here.
No, you don't. You approve of the policy.
I wonder if they're going to talk about
market for a long time.
CBDCs,
even before COVID.
Yes.
Demographic issues
demographics.
There. Yeah.
It's working in a way to tighten the labor market for quite a long while, and it's going to continue this way for a while.
I mean, the economic conversation, it gets into an interesting question, Chair Powell, where now we're wondering, easier to fight inflation last year when the economy was doing better. But now that we're seeing signs of softness and weakness in manufacturing, and you mentioned the labor market starting to cool off, about overdoing it and the risk of overdoing it. Do you wonder about that, or you're still just focused on inflation?
Let me say the U.S. economy has actually been quite resilient, and the data that we're still seeing, including since the last meeting, still is consistent with with an economy that's resilient and growing albeit at a modest pace. As I mentioned earlier, though, yes, there was no question. The first question was how fast should we go, and we went pretty fast, and we got to a level that we believe is restrictive. We're in restrictive territory. If you take the federal funds rate and you subtract some forward-looking measure of expected inflation, you'll get a significantly positive real rate, meaning we're probably in restrictive territory. So, and I think we have steadily slowed the pace of our moves, and it's appropriate to do so for one reason, because the more information we get, the better decisions we'll make. The risks of doing too much versus doing too little become more in balance. I wouldn't say they're in balance yet, but they're becoming closer to balance. I still believe and the committee clearly believes that there's more work to do, that there are more rate hikes that are likely to be appropriate, though.
So you think the risk is still of doing too little and not getting control of inflation?
Yes, and of course
But inflation expectations are, I don't have to tell you, very well anchored.
No, but the thing with the risks is that there may be social costs associated with restoring price stability. The social costs of failing to restore price stability will be higher in almost all likely cases. We've seen what that looks like, and it's just something that we have to do. It's the one of the principal things that society counts on us to accomplish, and I think we all feel committed to accomplishing it. It is of course a good thing that inflation expectations have remained anchored all this time, but our understanding of inflation expectations is not a precise one, and the longer inflation remains high, the more risk there is that inflation will become entrenched in the economy. So we have to, the passage of time is not our friend here.
What about a higher inflation target? I know none of you want to talk about that, but on Wall Street, there's this idea that a lot of things are changing in our economy structurally. The onshoring of supply chains and chip plants and all of that is going to be expensive and could permanently create higher inflation rates. Couldn't it, President Lagarde?
Well, at this point in time, and given the fight that we lead against inflation, the yardsticks that there is, the strategy that we've agreed, the expectations that we have, and the inflation targeting as it has been said, there is no way that any of us, I think, would consider changing the gatepost halfway or more than halfway through that journey. I think it's wonderful to have a forum like Sintra, which brings together academics and other than policymakers to actually consider those ideas and to explore them and to weigh the cost and benefit and all the rest of it. But at this point in time, I think we have to be as persistent as inflation is persistent, and we have to be resolute and decided and determined in reaching the target that we have set, and not debate the target as we are running that race.
But
So
it
they're
does raise the
doubling
question,
down,
Governor
guys,
Daley, about
doubling down.
how far inflation will come down to.
It does, but let me reinforce what Christine said. What is the inflation target? It is the definition and practice of price stability. In our legislation, it is what price stability is taken to be. That is.
I like how they talk about price. I love how they talk about price stability, but meanwhile, they don't get affected. Who gets affected? Like, they get to fly their private jets everywhere, but the everyday people are the people that pay the price, and especially the people that they're going to try to get to use their Cbdc, which they've been planning for years. It's nice to see Geek of All Trades, John Foster. Nice to see you, and Echo Leaf, Moo to you, Clint Alexander, Juan. Nice to see you, Meninja, Stacy, True, Lee, Juan. I think I said hi to Juan. Nice to see everyone. Meninja, what's up? If I missed you, please say hello to me. Joe Harvey, nice to see ya. All right. I think I got everyone. Automatic, Mark Rowe, No G, MetaMask, hi. Ozzy's in the chat too. Stop it. Stop it. You gave me another Litecoin? Mike. Oh my gosh, I actually acknowledged your name this time. Are you proud of me? Thank you so much. I appreciate that. Ah, I am stacking like things today. Oh my god, that just made me so happy. Literally, that just made me so happy. Like, that just like made like all my like anger about this computer crashing just go away. Thank you. Oh my gosh, Roberto, hi, nice to see you. I'm so happy right now. Crypto Rado, nice to see you. Litecoin pumping coming. I feel like I'm pumping with Litecoin. Avo, nice to see you. MetaMask, I did hear about KuCoin KYC. They do want to implement KYC. Patrick DeMars, what's up? Nice to see you. Flat Smack. Oh gosh. So guys, as you guys know, Jerome Powell is live right now with the ECB. So we're gonna jump back into that. I just want to say hi to everyone first. Oh, Mike, I can't believe you right now. I'm literally so shocked. So shocked.
Real estate, particularly office real estate and the surrounding retail that's suffering in many major cities. We don't know how long that will last. It feels like some part of that will be persistent and will last. You mentioned the data as well. You know, we've I guess response rates to a lot of the data that we collect and the other organizations collect, the response rates have gone down, and you're seeing a lot of volatility in some of these data series, more so, I would say, more so than we've seen historically. So the data are even a little bit foggier than they usually are. But we'll be, in terms of
Everything's
what
so foggy.
the effects of COVID, it's going to have long-term effects on the economy. There may be loss of productivity. There's certainly been, for a generation of kids, some loss of education and training. I think it's hard to say how persistent all this will be.
What is your level of concern of commercial real estate, since you mentioned it in the U.S.?
It's something that we, of course, are watching carefully. The way it lays out is the large banks don't have large concentrations of commercial real estate. So that's a good place to start. A surprisingly large part of exposure to commercial real estate is in the banks that are under 100 billion. But there the worry is more banks that have a high concentration, and they're relatively few. So it's something that we're carefully monitoring. Bank supervision has a playbook for this. So supervisors are talking to banks about their concentration in real estate and what can they do and how do they manage themselves out of this. It's something that we're well aware of. It's not a surprise, and we're focusing on it.
Is it one of the reasons you were cautious in the last meeting?
Commercial real estate? I wouldn't say so. No, I just, generally speaking, it was at the last meeting, it was about, what's in the pipeline, how far we've come, what's in the pipeline. I will also say that, though, that the bank stress part of the decision in my thinking anyway was the bank stress that we experienced earlier this year. There's a fair amount of research showing that when something like that happens, bank credit availability and credit can move down a little bit with a bit of a lag. So we're watching carefully to see whether that does appear. Of course, tightening in financial conditions is what we're doing intentionally. So we have seen bank credit conditions tighten. The question is, and that's what we're trying to achieve. The question is there another channel of that or a greater amount of that coming from what happened in March? We don't really see any evidence of that, but I think that's certainly in the back of my mind to see whether we do see that.
Yeah, it gets into the question about lags. How long are lags, Governor Bailey? And do you expect to see more?
It's a very interesting question in terms of the transmission of our monetary policy decisions. So if I can just illustrate it with the UK case, and obviously it's not the only.
Okay, my friends. So interesting stuff Jerome Powell is saying about banks, their credit, yada, yada. So basically, again, banks are still having trouble, and real estate, she's like, oh, does real estate have anything to do with your last meeting? Like, of course not. He's not thinking of real estate. He's thinking about the banks crashing and freaking burning. Because that's what's happening. That's what's happening. Like, banks are trying to recover, but they're really struggling. Kenyo is in the chat. Hope you and Soph are doing good this morning. Where what are you guys talking about? He's a lagger. Oh, I thought that said Ledger. I don't know why I saw that moo. Moo. I call you moo all the time, Echo. Moo moo. Like BlackRock. Yeah, there's a lot of things going on. Chirpow, yes, very much Chirpow. Me1, nice to see you. What's up? Yes. So their banks really own a lot of stuff. Like they own real estate. They own like a piece of everything, which is why probably they don't like Bitcoin because they can't own all of it. Now, Bitcoin right now, as Chirpow is speaking on this panel with the European Central Bank, we are looking at Bitcoin price. Bitcoin is $30,167 today, down 1.73%. This is actually following a Bitcoin buy from Michael Saylor. So if you guys are here, make sure you guys are smashing these likes, sharing the stream out with friends. Let's get 100 likes and 100 live viewers. We're almost there. All right. So we see on the daily here with Bitcoin, we're seeing a dip continuing with the money flow. We're not seeing a nice curve up, which I don't like. Now we're printing red dots above. Momentum is starting to come down here. VWAP is below the zero line, just chilling. So we need to see some better stuff going on here, guys. We need to see more volume. If you guys think we're going to turn around and have a green day, let me know. Put a G in the chat. If you guys think we're going to have a red day, please put an R in the chat. Now, we have been sideways trading. Yesterday, we had a nice pump. While we were live, actually, we hit this high while we were live of $31,050 around. We closed yesterday at around 30.7K exactly, almost. Now, today, we are taking a dip, as you guys can see. I'm hoping that we just maybe sideways trade here a little bit and hopefully not head down to this point of 28.3, 28.4 that we were trading between before of 28.4 and again 27.1. I see a lot of R's in the chat. No, why are you guys bearish, my friends? No, true. See, put a G. I feel you, dude. I feel ya. Do you guys like the new emojis? Do you guys like the new emojis? Let me know. Continuing on, Bitcoin again sideways traded. I was hoping like this was a stronger green candle yesterday, closing above, the slightly higher than the other day, which was 30.714. But yeah, I want to see a green day today, but I know I'm asking for a lot. I'm being greedy. You guys are like, Miss Teen, you can't have green every day. I know that, friends. I know. But I'm sick of this sideways trading. I'm sick of it. I am sick of it. We got Ethereum 1855. Let's check back here. Is Chirpow talking? No. Okay. So we're at $1,855 Ethereum right now. We keep messing with the same levels here. Now, we were sideways trading between 1708 and 1820. Broke above that. Then we were sideways trading between 1820 and 1911. And 1911 literally still coming into play. Yesterday, what did the wick hit but couldn't close above? 1911. So everything we've been talking about here on this channel is extremely relevant right now, but hopefully we could break out of this and have a nice time. We've literally been sideways trading, barely making any price movement here for Ethereum since we had this nice green day on the 21st. So I'm hoping for a breakout. I'm hoping for some zest, some spice. Let's see. Let's check back in. Chirpow's not speaking. Let's move on. Let's go to Litecoin. Litecoin's down 3%. I don't know what the freak is going on with Litecoin. As you can see here on Market Cipher, we're having a dip in money flow and a dip on the VWAP. Seems like momentum is starting to shift downward. I don't like it. Now, we do have Litecoin that tried to have that $91 price boost right here, but nah, we couldn't hold on to it. And now we're just sitting here again at $85.28. I don't know what's going on with Litecoin. We do have the halving soon. I could get the Litecoin block countdown. We have 35 days approximately until the halving happens. Once that happens, the block reward will go from 12.5 Litecoin to 6.25 Litecoin. Speaking of Litecoin, it's also merged mine with Doge. Doge is around 6.5 cents today. Hoping to bounce back there. What's going on here?
In anticipation of moves. So by the time we lifted off in March of 2022, the 2-year had moved from 20 basis points up to 200 basis points. So financial conditions now move in expectation, and the whole modern communication strategy really helps that along. So that is different. What may or may not be different, and we also haven't had this kind of tightening in 3 decades. Really, we've had tightening, but it wasn't. This looks more like tightening cycles from the 70s and 80s. So So what we see is a picture of literature that has, the older literature says, a year or two for activity and add a year for inflation. There's new literature that says it's much faster than that, and I think we just have to use our, to watch and see what's happening. There are reasons to argue that it would be faster this time or slower this time, but I just don't think we know at this stage.
Well, it kind of gets into the question about the markets, and you're saying that it's a transmission mechanism. You're all talking very hawkishly and saying there's more work to be done and we're still worried about inflation. The markets pretty much think you're almost done, all of you guys. Maybe one more hike in July and then done, and then into cuts next year. Is that wrong, President Lagarde?
I look at the data we have. I look at the mandate we have. I look at the transmission lag, and we've decided for ourselves that we would use 3 criteria.
Just let us know when the money printer is going burn.
Of course, we are
please.
not completely oblivious to what happens in markets, but we have to be guided by what the mandate is, what the data delivers, and what criteria we take into account in order to determine our policy and to establish our stance going forward. That's the only way to go.
But I guess, there's financial conditions, and I don't know, Governor Baylor, are they working against you? You're trying to fight inflation, and MSCI World is up nicely this year.
Well, by the way, the market, I don't think thinks we're nearly done at the moment. They've got a number of further increases priced in for us. My response to that will be, well, we'll see, because we are, as we were saying earlier, we're essentially evidence-driven in that sense. So, we'll make our decisions based on that. I think you're right to point out, as you said earlier, and I would draw this point out, that there are 2 parts to this. There's where the peak is, and then how long it's sustained beyond that. And I think both of those are relevant. Both of those are things that will, sorry to state the blindingly obvious, will emerge with time. But I've always been interested that the market thinks that the peak will be quite short-lived in a world where we're dealing with more persistent inflation.
Right. They did finally price out the cuts in the US a few weeks ago. Market was primed for cuts. I assume you were pleased to see that that's no longer the case.
Let's go, Chappelle.
So if you go back and look at forecasts from the participants on my committee on inflation, you'll see, we've been consistently thinking this is going to take some time. It's going to be a process that will take longer than we would have hoped. And it may well be a bumpy process. But markets have gone back and forth between pricing and what appearing to price in pretty quick declines in inflation to coming back to being more in alignment with the thinking of the committee. And that's where we are right now, is closer to where committee participants are. But as Christine said, we're not focused on what the market's forecast is. We have our forecast, all of us who are on the committee. We work hard to develop an understanding of what's driving inflation and what the path forward for inflation is. We make our best estimates. And that still is that it's going to take some time. It's just going to take some time. Inflation has proven to be more persistent than we expected, not less. And of course, if that day comes when that turns around, that'll be great. But we don't expect that. We don't plan for it.
So is it counterproductive to you that the stock market has rallied, the bond market has rallied? The market is fighting the Fed. The market thinks you're closer to the end. And that does make financial conditions easier.
Wasn't that the...
You can't fight the Fed, but they're fighting the Fed. Is that a problem?
I don't see it that way. I don't look at it that way at all. Honestly, we have different jobs. Our job is to bring inflation down to 2% and sustain maximum employment. That's our job. That's what we think about. We look at the data, and that's what we care about. And markets react, different parts of the market react in different ways. It's just not something that is a principal focus of our work.
But it did seem last year like you wanted a weaker stock market. You used the word pain at Jackson Hole. It seemed like you were trying to communicate that financial conditions should tighten, and less so this year. Is that right?
Not really, no.
Okay.
Of course, we work through financial conditions. That's what we do. Our rate and our all the things we do and say work through financial conditions to affect the real economy. That's how it works. But it's broader financial conditions. So we're not focused on any one market. We're never thinking, oh, let's do this to this market. It's just in general, let's communicate what we want to do and why we want to do it. And financial conditions adjust. And that's really all we can do. We do not target particular parts of the market, although of course we do monitor market conditions.
So you don't care what the stock market's doing?
And crypto?
I look at broader financial conditions. It's one of many conditions, along with interest rates, credit spreads, everything, all of the conditions and the availability of credit. It's one of many things. Again, we don't focus on any one thing as the key thing.
Governor Wada, how important is it to you, the markets, as it relates to financial conditions and the mechanism for monetary policy?
I mean, the stock market?
Stocks, bonds, currency.
Let me know how Jerome Powell, earlier we were listening and he was like, the economy is doing great. It's pretty good. Like, it's pretty sound, pretty resilient. And now he's talking about, oh yeah, so we don't, inflation has been hard. It's been a little more difficult for us to adjust. Poor Powell. He's just saying everything's fine. No, everything's not fine. Inflation, we might deal with inflation, we might not. The banks are in trouble, but the banks are fine. This is crazy. I love my miners in the chat, by the way. I know Jimmy's talking about some new mining operation out here. Let's see what's going on here during the meeting. Chris, all right, they're talking about Russia, so we're not going to really cover war right now. Let's go back. Let's go back. Lazarus, nice to see you. We're going to talk about some price action right now. All right. Lazarus, B Team Crypto, nice to see you. Exactly, Geek. If there were no miners, there would be no Bitcoin. We love the miners. I love miners, man. You guys are like the top-notch zesty nerds like that we all really need in our lives, to be honest. Like, that's like why I love being a nerd and like why I love nerds in general, because like we're powerful individuals. Like, you guys put your mind to something, you're mining some Bitcoin and, really just bringing about this whole decentralized ecosystem that we thrive on here. Now, again, 30.2K Bitcoin. Bitcoin is struggling right now. It's barely been trading. As you can look on the minute chart, it's just been really flat. Not a lot of zest here, guys. Not a lot of zest. The hourly has been a little volatile here, the hourly. We had a nice pump on the hourly here, but nope. That was literally like last week. That was basically like last week, but we had a nice pump here on the hourly, but we haven't been able to come back to that level yet. Come on, man. Bitcoin, what's going on? What is going on? All right. Oh, wait, my bad. Sorry, you're a geek. My bad. Geek of all trades. Not nerd, geek. Got it. You guys are really funny. I know, Chris got muted. My bad. I was looking at the chat. I got distracted.
That resilience, I mean, you see it when you talk to businesses. I spend a lot of time talking to businesses, and I've spent a lot of time in recent months talking to food-producing businesses.
What's an L3,
trying to
Chris?
Understand the sort of,
Is that like
the
Litecoin
slower
cubed?
than, frankly, we expected decline in the rate of food inflation. And one of the things that I get quite consistently, and this is where sort of the Ukraine-Russia situation comes through for real, is they say, well, last year we bought forward our sort of supplies to a much greater extent than we would normally do because we were not confident we could actually get them. Consequences, we've locked in higher prices for, sometimes they say 6 months to me. And that, of course, is affecting the passage.
You liked my Litecoin cube joke? Automatic? I didn't think anyone would pick that up.
Very direct effect, actually.
But there's nothing central bankers can do about that, is there?
Well, I think the first thing we need to do is understand it. That's a good starting point. Well, we have to then design.
You can always just keep crushing demand, but you can't do anything
Well,
about
we
food
have to
supply.
design policy. I mean, we have to design policy and take our decisions. With
Guys,
the
smash
best.
these likes.
Yeah,
Guys, we have over 80 people watching, almost 90. Let's get 100 likes and 100 live viewers. Smash these likes, share the stream out with friends. If you guys are just tuning in, Jerome Powell is live from the European Central Bank panel, and they are talking about banks, central banking, inflation, all of which questions really aren't getting answered here, but it's fun to watch at least. No, don't lose hope in crypto. This is only the beginning, bro. Really, this is only the beginning. I'll go on an empowering rant in a little bit.
Rate of food price inflation, for instance, but it is taking longer than we expected. So that's what we have to factor in and decide how best to, in a sense, to respond to that with monetary policy.
It's not just Russia. Governor Wada also, we're following the tensions that have increased between the U.S. and China, between Europe and China. Do you think that's having a material impact on global growth?
Well, at least there's a tendency to relocate production sites out of, say, China into other Asian economies, including to some extent Japan. So in the short run, this is having a small positive effect on the Japanese economy through business fixed investment. But in the longer run, there will be inefficiencies all over the place. So we'll see.
So Japan's a beneficiary of the flight out of China?
In one sense and in the short run, but in the long run, I'm not sure.
I mean, Chair Powell, how do you think about, it's obviously a risk and it hurts trade. How do you think about the U.S.-China relationship as it impacts the economy?
We don't have any role to play in the relationships between the countries, but China's a very large, important economy. It's a big trading partner, mainly consisted of us buying things that are made in China. I don't think, and of course, the Chinese economy came out of the COVID and looked like it was recovering strongly. Now it doesn't look like that. It looks like it's slowed down, and there's some issues there. From the U.S. standpoint, at the margin, that probably means a little bit less global demand. I wouldn't say it's a first order consideration for us, though.
How does the Chair Powell referenced the disappointing nature of the Chinese economic recovery? How does that play into Europe's recovery or the global growth picture?
Well, first of all, I think.
Okay, I want to talk about while Christine is talking, because I don't know, Christine is Christine. You know what I mean? We're gonna kind of ignore Christine for a second here. This morning, if you guys did not see, Michael Saylor actually bought an additional 12,333 Bitcoin for around $347 million, an average price of 28.1K per Bitcoin. And as of today, or as of yesterday, they hold a total of 152,333 Bitcoin, acquired for about $4.5 billion at an average price of $29.6 thousand per Bitcoin. Some big news there. So Michael Saylor's racking up them Bitcoins. So our friend in the chat, NoG, says that he is losing hope on crypto and that he needs a rant. Well, listen, man. I know there's a lot going on. I know there's some sideways trading. I know that there's things coming out of the woodworks from all these crazy regulations and CBDCs coming about. But we know right now that if you take a look at Bitcoin, it's been, 14 years? And they being the central banks, the institutions, the banks, the payment processors, are beside themselves. That's something that's only 14 years old, decentralized, and really spread by the people and not by institutions, is taking over the world. El Salvador, using Bitcoin as legal tender, the first country to do so. And when they did that, their tourism went up 90+%. They were able to pick up a lot of the things and change a lot of the things about El Salvador, bringing in more entrepreneurs, spreading literal jobs, economic freedom. There's a lot that plays into crypto. And why wouldn't you want to be a part of an ecosystem that you can opt into, where you don't have to worry about inflation, you don't have to worry about your money being taken away from you? We know there's a finite supply of 21 million Bitcoin. In inflation schedule every 4 years called the halving. Even Litecoin's going through its halving almost very soon. This is important. Most importantly, you get to be your own bank. There are people all over the world that cannot use their currency by the time they maybe need to. For example, you get paid on a Friday. You have to spend your money by Monday, or else your money's not going to be worth anything anymore. And that is worrisome, guys. That is worrisome. You want to be able to be your own bank. You want to be able to own your wealth. And again, escape inflation in places that most people can't. A lot of people can't be banked in a lot of these other countries. And Bitcoin, having an internet connection, a device, gives them hope, gives them something they can own when they are usually excluded from a financial system. Even here in the US, if you have under $500 in your bank account, you can't be banked because you get a fee every month for not having enough money. That is insane to me. That is insane with me. Tripal, what's going on, bruh?
Powell did talk about, I mean, one of the things that I don't know that there was a simulation of is we had a few bank failures in the US this year. And I know it forced some of you into action to shore up banking systems. Are we in good shape now? Is the global and European financial system in good shape? Have we healed?
Oh, this is good.
You know, I can only speak to the banks over which we have supervision, and those are the euro area, the European banks. But I'm looking at the euro area specifically. We have been, enforcing Basel III to the entire banking sector. The capital ratios are very high, 15.3% if I recall. The leverage coverage, the liquidity coverage ratio, very high as well. So we have not experienced, the turmoil or the difficulties in Europe. And Europe does not include Switzerland. Thank you very much. But we are extremely attentive. We reinforce the stress testing constantly. We are I'm very pleased to see that the Basel III agreement has now been reached, as I understand, between Parliament, the Council and the Commission, so that we can actually roll out Basel III with as limited exception as possible. And we have to continue doing that job.
Any lessons that you took, Governor Bailey, from what happened earlier this year?
Well, let me start with a sort of bit of backdrop. I think it's important, drawing on what Christine was saying, I think it's important to, in a sense, reflect the fact that
Smash these likes, guys. We have 90 people. Let's get 100 likes and 100 live viewers.
paid off in the sense that we've been through, and we are going through some huge economic shocks. And the banking system, certainly I can speak again as Christine does, I can speak for the UK banking system, is resilient to them and is doing what we want it to do, which is support the economy, not the other way around, to be honest, going back to the crisis. So that's an important starting point. Now, I think there are important lessons from, important issues that we have to reflect on from what happened. Christine made her subtle reference to Switzerland. Well, there's a huge sense of irony in the British, Christine. Look, I mean, there is obviously a question posed by the Credit Suisse, handling, which is, are the resolution plans for the major banks that we've spent the last 15 years developing fit for purpose, or are they not fit for purpose? And if they're not fit for purpose, then of course we cannot sit here and say all's fine, because clearly we're going to, regrettable though it would be after 15 years of work, we're going to have to sort of, tear them up and start again. Now, I'll give you my view on it. I'm going to say this. I have not yet heard the case made to me which suggests that they are not fit for purpose. I'm going to state that, but I'm not going to leave it there. We have got to have, we've got to have this.
Sheesh, where is Chirpow? I need to hear Chirpow. If you guys, hold on. All right, we're having an uptick in price. We're at 30.4K. Retro Mike, Other Miner said, you'll send me 1 Bitcoin for me not to sing? Listen, I think I might accept the bribe. Guys, let's get 100 likes and 100 live viewers. What's going on, guys? Why are we lacking today? Danny from the blockchain. Nice to see it. Javier, smash the like. Yay. Powell's sleeping. Listen, I don't know. He seems like he's writing notes in the back. They're looking at the banks and they're like, oh, the banks are going to be fine. I just really want to know where they're going to mention CBDCs. I need to know. Take the corn. Nah, keep singing. Listen, I'll moo for you. Echo leaf. Moo, moo, moo. Listen, guys, we need to pump it up. Pump it up. You got to pump it up. Don't you know? Pump it up. You got to pump it up. Don't you know? Pump it up. All right, we're starting to pump it up a little bit, guys. We have a nice green candle on the hourly right here. Let's get it.
And we're not hiding from that at all. We understand there
Is the audio
gonna
working
need
for
to
you
be
guys?
regulatory strengthening of both regulatory and supervisory practices as it relates to institutions of that general size, I would say.
You got a lot of questions on that from Congress last week.
That's mostly what they wanted to talk about.
They want to make sure that you aren't, well, in part, not going to increase capital levels and sort of choke off the small and regional banks in this country and make it hard for them to compete.
So the U.S. has something like 4,500 banks. It's the most banks by a pretty big margin, I think, of any major economy. And we think it's a real benefit to have banks of different sizes and business models that serve local communities and offer different products, as well as having the large banks. And the large banks in the United States are very strong, well capitalized, a lot of liquidity. And they've been a source of strength, I think, through the last couple of events. So
Source of strength.
I think it's important that whatever changes we do make, keep in mind the need to preserve the business models of these of smaller banks and not just of the largest banks.
Any concerns for you,
gosh.
Governor Ueda, on the strength of the global financial system at this point, as we go through this, I don't know, once in several decades tightening period?
The little banks, they've been the stronghold. The banks have been a stronghold. Guys, look at the capital for these banks. Over 722 banks lost over 50% of their capital in the first quarter of this year. Guys, this is crazy. This is crazy. It's fun how they're like, oh, the banks are fine. Then they're like, oh, the banks aren't fine. We actually have inflation. Inflation is a problem. Crazy. Absolutely wild what's happening now. As this is all happening, though, we do have Bitcoin pumping a little bit, 30.4K we're at right now here on the hourly. Michael Saylor buying a ton of Bitcoin. We also have Fidelity entering crypto as well. They are having a Bitcoin bet. Not really even a Bitcoin bet. Fidelity, if you guys didn't know, has been mining Bitcoin since 2014, and they are jumping on the bandwagon in terms of ETFs. If you guys didn't see, Fidelity is readying for their new spot Bitcoin ETF filing. Asset manager Fidelity is expected to file with the SEC for a spot Bitcoin ETF, joining other big managers like we have Invesco, BlackRock, Wisdom Tree, Van Eck, Bitwise. They all filed to the SEC, and they did not include ARK, which is Cathie Wood's investment ARK. They are also looking to have a Bitcoin ETF as well. And we covered yesterday that in the case that ETFs start being approved, then Cathie Wood's ARK is going to be the first one approved. So also keep that in mind. It's very important. Fidelity, they did not comment, but they're also a part of a consortium that is affiliated with the new EDX exchange that is also with Charles Schwab, Paradigm, Sequoia Capital. That within that exchange, they listed Bitcoin, Litecoin, Ethereum, and Bitcoin Cash. There's a lot of optimism here, according to Edward Moya, the senior market analyst at Onada. If that gets it done, it should open the door for a lot more institutional money. And a lot of people have been trying to file since 2021, maybe even earlier for an ETF. So hopefully Fidelity gets approved. But if ETFs start to get approved, look out for Cathie Wood's ARK. This is the next big ETF that everybody is talking about. Still, Christine is chatting over here. Christine's chilling. So at least Crypto D, nice to see you in the chat. I should be on American Idol. I agree. I agree. Guys, if you guys think I should be on American Idol, put an A in the chat. And if you don't, then put an N for no. So an A for American Idol and N for no American Idol. Please let me know if you think I should be singing on, if I should be singing on TV. Let me know. Or you think I should just stick to this, you know. If you think I should just stick to my day job. Let's see what's happening here. Uncle Jimmy, you don't back me? You don't back me to go on American Idol? Ozzy does. Ozzy backs me. Echo backs me. Also wants me to go line dancing too, which I'm waiting to go line dancing, Echo. But wow. Wow. Where's the love in the chat? Where's the love? What happened? Are we really a zesty family? Hopefully Chirpow starts speaking again.
Is very much using fiscal policy to try to address the structural issues. And
Uncle Jimmy is keeping it real.
that's not a comment about the stance of fiscal policy about more or less. It's a comment about the fact that, going back to the point I've made about labour markets, and actually the low potential rate of growth in the UK economy. That the more we can do to tackle that, frankly, the better.
What about you, Chair Powell? I mean, there's been a lot of
Chair
fiscal
Powell.
largesse in the United States, the COVID stimulus, and now even new policies that are just filtering through, like Inflation Reduction Act, infrastructure, CHIPS. There's still American Rescue Plan Act money getting doled out. Isn't that making your life harder?
Well, so echoing my colleagues, our assignment is to deliver price stability kind of regardless of the stance of fiscal policy. And we don't play a role, formal or informal, in advising the fiscal authorities. There are other agencies in Washington that do that, and that's really not our job. I will add, though, without crossing any lines, that the spending during the pandemic was very high, and it's come down. And so we look at the fiscal impulse from the level of spending, and it's really not material. It may even be slightly contractionary, but let's just say it's flat. You identified those bills, and I think you are seeing some of that money showing up in construction. Construction numbers, it's supporting construction activities, particularly the infrastructure bill. But I wouldn't say that that's if you look at where the inflation is in the economy, I wouldn't say that that's an important driver of inflation.
Oh no, did they rug the stream?
I wouldn't say that that's an important driver of inflation or something that we think about or consider.
So you mentioned the consumer. So the excess savings, you think, have pretty much come down. Where do you think the U.S. consumer is headed?
The consumer had savings from two sources. One was just the fact that people couldn't travel and couldn't kind of spend money on services. That was a lot of it. And there were also the fiscal transfers that happened. And those, there are many different estimates. I would say for people at the lower end of the income spectrum who tend to have a high marginal propensity to consume, most but not all of that money is gone. So there's certainly some residual support for spending in laws that passed at the beginning and during the pandemic. But that's, again, I wouldn't say that's today the main driver. I think if you look at the strength of the labor market, still creating more jobs than there are new entrants to the labor market, and wages are still pretty high. So you're driving up disposable income, and that is driving consumption, and that's driving the economy.
Wanted to also ask you guys about the balance sheet, very hot topic. Governor Wada, how do you think about the expansion of
Everything is fine. Chirpow, he says the same thing every time they ask him a question. They're like, so what do you think about inflation? He's like, well, our goal is to keep inflation low for the consumer, and the consumers are consumers, like the consumers, right? And then she's like, yeah, okay, so the next guy, so what do you guys think about this? And then they're like, well, we think everything's good. This is this, and this is that. And she's like, oh, that's great. I'm waiting for some, I don't know. Do you guys feel like we're getting solid answers out of anybody on this panel? I mean, I guess they're trying to give us some clarity by, being here, being live, right? I just don't feel like I'm getting any answers. She asked about the banks and if the banks are okay. And he said, oh, well, I think some of those smaller banks acted and gave us some stability. But that's not answering the question if the banks are okay. Again, over 722 banks lost over 50% of their capital within the first quarter of this year. Bank stocks, you look at bank stocks, they're not doing great. Not at all. Not at all. You could even take a look at KRE, which is the regional banking ETF. $40, down 1.28%. Does this look like a recovery to you? Doesn't look like one to me. I mean, listen, this is the hour, but if you're looking at the daily here, it doesn't look like much of a recovery here. We saw some lows, 35, even lower than that. We had a wick here in May, 34. But guys, come on. This is the banks. Just a landslide down. So how are the banks doing okay? I just don't understand like all these views that they have, because I'm just seeing something that's different. PacWest. How is this? How are the banks doing well when this is what's going on? This is a regional bank, PacWest. Literally even, not really trading at all, $7.94. When this is the high of the year, right here. Oh, no, wait. Hold on. Oopsie. Come on. So the high of the year, let me get that. Sorry, I'm just lagging a little bit. You guys could see it now. So if you guys look at the high of the year, which was around right here, down 78% or more. I believe it's more. 78% or more down in the new year. That is absolutely wild, and we're really not recovering.
Cap is about $1 trillion a year, and reserves appear to be quite ample, so it has a ways to go.
Is there anything that would make you speed that up or slow that down?
You know, we always say that we're prepared to adjust in light of evolving conditions, but I don't see anything that would cause us to want to do that right now.
Oh.
Okay, so in the moments that we had left, we've talked about a lot of the risks. We've talked a lot about some of the concerns out there. I want to hear some optimism, maybe, and what makes you feel. I mean, none of you are really talking doom and gloom on recession, but what makes you, President Lagarde, optimistic right now?
In my professional field?
However you want to interpret the question. Personally.
Otherwise, there are lots of things that make me happy, and I hope for all of you. I'll just mention one success, which I'm really proud of, and I'm very proud.
Joe, you and the other miner with this option in the poll. I won't give it to you, dude. I will not give it to you. Oh gosh, Gary Gensler, give your thoughts on Chair Powell kind of dodging the questions out here.
Digital for the digital euro for our CBDC, and that gives me hope, because I think that it really demonstrates the capacity to innovate, the capacity to work as a team, the capacity to anticipate what digital payments will be tomorrow. Now, some people are very skeptical and they say, well, you're taking risk, financial stability, possible runs that will be accelerated by this. And all I would say is, number one, you have to be ready. You want to keep the sovereignty of your currency. So many years ago, who would have thought about all the users and the applications that you have on your cell phone? None of us. So being prepared, being ready, paying attention to what actually Europeans, and particularly young Europeans, want in terms of currency and form of currency is something that we have been doing, that we have accelerated, that we have not decided for sure, but at least the legislative piece is on the table. There will be a lot of discussion. And that's, in a way, also the result, one of the good benefits of COVID. We have talked about the downside of COVID and the consequences, but the way in which so many of us have become more digital, better equipped, probably more productive, it will be demonstrated probably with a lag time. But when I look at my member states, the countries that were least digital have really traveled very fast to become much more digital. So that's a good reason to hope. And the resilience demonstrated, but I have mentioned that earlier on, by everybody, from the individuals to the entrepreneur to the corporates to governments. We, in Europe, decided to get together to borrow jointly, despite the fact that it's laborious, that it's painful, that it gives a lot of things to report about to a journalist, is also a sign of progress.
And just to be clear, a digital euro will happen when?
That will be decided by the governors in Governing Council. We will decide that at the end of October. And then there will be another phase of piloting, experimenting, fine-tuning, because if and when we go, as will be decided by the Governing Council at large, we want to get it right. So we're not going to do a half start or a fake start. We will move with success.
What makes you optimistic, Governor Bailey?
Well, actually, I'm going to build on Christine's theme, because as well as we're also working on retail digital euro, we're actually also working on wholesale digital money and completely rebuilding our wholesale payment and settlement system in the Bank of England to enable what could be a complete revolution in the infrastructure of financial markets and trade finance. And this is very exciting. So we put the wiring in the weekend before last. The engine should go in next year, and this has enormous potential to change the world, and at the wholesale level as well.
It's interesting, I feel like the world has moved on to AI beyond digital payments. Are you guys incorporating AI into your thinking about economies?
How do you move past the Cbdc part?
I think we're all on a learning curve. I don't know, I feel quite old when it gets to this. But yes, I mean, we're looking at it in two respects, certainly. One is, three respects. One is how it will affect the economy. Two, how we can use it ourselves, both in our sort of, analytical functions, but also actually in our operational functions. We're looking at it, I would say, with very open eyes. You can see the strengths and you can see the current weaknesses of it. And of course, it moves very rapidly. So yes, we're having to, certainly I can speak for ourselves, we're having to devote quite a bit of time now to what the potential is for that.
Chair Powell, is AI one of the things that makes you optimistic?
So on AI, we're just doing what everyone else is doing. We're trying to get smart about it, and it's obviously has huge possibilities. Technologies tend to, propagate through the economy fairly slowly, and this one may be the exception, maybe not, I don't know. But it's something that we're spending a lot of time on, way too early for conclusions. I wouldn't use optimism, but I would say this in answer to your first question, which is when inflation first arrives, it's really due to very strong demand for goods and goods pipelines that just aren't working, and shortages. So that's where it comes from. It wasn't about the labor market at all, right? Or very much. As we get to this stage and to looking forward, we think it will be significantly about getting the labor market supply and demand back in alignment. I would say it's a positive thing. I'll say it that way. It's a constructive thing that we've been able to raise rates 500 basis points with the expectation of going further, and we still have a very strong labor market, but nonetheless one that is in fact cooling in just the way we would have hoped, which is to say through things like lower job openings. Job openings are coming down. The quits level has returned to its pre-pandemic level. Wages have, if you look at employment compensation index or average hourly earnings, they've moved down about 1% towards more, still very high, but towards more, so a more sustainable level that's consistent with 2% inflation. So I would just say that's the makings of, if that process continues in a gradual way without really any effect on employment, the longer that goes on, the better. And in a way, I take that as a very constructive path. It is not guaranteed, but the fact that this is really there, and that's what's been happening for a year, more than a year into our tightening cycle, I would take as a positive thing and perhaps a hopeful one for the future.
Just be careful not to overdo it, right?
Right.
What about you, Governor Wada?
Let's see. As other central banks are thinking of issuing digital monies, we are taking a different route, and we have decided to issue new currency bills starting next year.
You're going all in paper.
This will cheer up public's confidence in the BOJ.
Oh.
more seriously.
I love how they laugh. Like,
As
this
I
is all
said,
fun.
wages have started to rise at 2% or so for the first time in 3 decades. More importantly, we are seeing as a sign of a change in inflation expectations, changes in price wage setting behavior of businesses. So previously, businesses hesitated to increase prices because if they did, others will not follow suit. Now say they are raising wages because if they didn't, they will have trouble recruiting workers because others are raising wages. We think this is a good sign for us.
So the topic of Sintra of this ECB forum is inflation, volatility. So now is prediction time. In 1 year, when hopefully I'll be invited back, President Lagarde, inflation rate in the UK is what?
Our last forecast, we expected inflation to come back to target towards the end of next year. We're going to start the next forecast in about 2 weeks' time.
I was trying to
Yeah, you
get
were
a
trying to
jump
get further
on
than
that.
that. Yeah,
I was trying
Nice
to jump
try.
on that. Do you get to 2% by this time next year, President Lagarde?
You said a year from now, right?
Yes.
Okay, so the projection we have is 3% for next year. Headline.
Will you be satisfied with that?
I want it to be timely. We all want it to be timely.
Timely. Okay. Chair Powell?
I don't see us getting back to 2% this year or next year.
You don't?
No. I see us making progress, steady progress on, this is core inflation.
Yep.
Headline inflation is coming down now, it's lower than core. But for core inflation, I don't see us getting to 2% this year or next year. I see us getting there the year after.
2025.
Yeah.
Wow.
Core inflation 2%. So you're going to be restrictive for a long time.
No, well, we will be restrictive as long as we need to be. But you know, if inflation is coming down sharply and we're confident that it's on a path to 2%, you know, that would be a different situation. You would begin to think about loosening policy. But we're a long way from that. That's not something we're thinking about now or in the near future.
Governor Ueda, are you going to get to the 2% by your measure?
So our projection as of April, inflation projection, has for 23 fiscal year, 1.8%, 1.8 headline, 2.0% for 24. Now, this makes my job of justifying underlying inflation rate staying below 2% a bit harder. But we keep saying that we don't have a lot of confidence in this 2024 forecast. This may change depending on the data to come out.
Do you guys feel you've been through a lot of hard moments, you know, COVID and the inflationary challenge, and now we're starting to see economies weaken. Do you feel like it's a particularly difficult point in your central bank journeys, Governor Bailey?
Yeah, until we get inflation back down to target, yeah, we've got a very big job to do, and it's a job we have to do. Well, I don't know about stressful, but I think, you know, look, we sign up for this job, and you don't get to determine the conditions that you do it in. So we just got to do it. I mean, that's our job.
Come
For
on,
you, President
Bitcoin.
Lagarde?
Likewise, man's got to do what a man's got to do. We signed up for the job, and a woman's got to.
I haven't seen you stressed.
We have a job to do. We know that. We know that society is counting on us to do this job, and that it really matters. Price stability can matter for decades. It can benefit for people over time. I think we all know that, and we'll do the things that we need to do to restore it.
And Governor Ueda is feeling good.
I didn't know there was going to be so much traveling and so many press conferences.
Welcome to the world of central banking. Thank you all so much for taking the time today and all my questions. It was a pleasure. Thank you.
Woo! What? Oh, sheesh. Oh, gosh. So that was Chair Powell and the ECB forum. the European Central Bank Forum on central banking. They said basically a whole lot of word salad. Word salad. What we had there is, is inflation going to be okay? The banks are good. Inflation is good. But also, we're not going to make it down to 2% inflation. Not this year, not next. So is this, again, they have to understand that when they say these types of things, maybe they have effect on the markets. I don't know if that's even considered, causing some price action there. However, they're talking about digital currencies. Digital currencies. They literally brought up the digital euro and how they have to adjust. They have to, just throw in, hey, things are changing. Technology is changing. So we're going to throw out that digital euro. We haven't made a real decision on it. The decision will be made by October. Guys, let me just tell you that Christine has talked a lot in the past about the digital euro. She's talked a lot in the past about how this will impact everyone and how it will actually control you. So I don't understand how they're saying they never make a decision on this, how they don't know what they're going to do with the digital euro, when a lot of this already, like I said, has kind of been decided, along with their tyranny on smart contracts, as they literally want to kill them. Want to kill smart contracts. So as you guys are hearing Christine at this thing, she's laughing, patting the other guy on the side. Ha ha, so funny, so funny. They published their digital euro bill featuring privacy controls and an offline guarantee. This comes from Belgium. The European Commission published its legislative plans to underpin a digital euro, saying it would ensure Europeans can pay digitally for free across the currency zone. The text is a version of which was seen by CoinDesk 2 weeks ago that includes safeguards for privacy, which also gives you some maybe financial stability, but many stakeholders are already questioning the benefits of a CBDC. As Christine was saying in this live stream, it promotes a lot of benefits. It's beneficial for our financial system if people just use a CBDC or a digital euro. In a Wednesday posting, the EU executive's website, the Commission Executive Vice President Valdis argued that the CBDC brought strategic advantages. A digital euro will also enhance the integrity and safety of the European payment system at a time when growing geopolitical tensions make us more vulnerable to attacks to our critical infrastructure. Be available to quote everyone, everywhere for free, and could simulate innovation and competition in a market dominated by a few major players, mostly from the US. On a Wednesday press conference to present the plans, the European Commissioner said that she expected to debate the digital euro and have that intensify, and added that she hoped that potential options as the digital euro brings, such as its use in remote rural areas. Quote, somebody falling in love with digital currency is stretching it, said McGuinness, the commissioner's most senior financial services official, pulling a wad of banknotes out of her pocket, and says it's easier to talk about cash because it's tangible. The law doesn't bring the digital euro into being as such, since the ECB says that it needs to decide whether to issue the CBDC. Officials argued that the state-backed digital currency features private payments, means aren't always able to, meaning they're allowing payments between friends with higher data protection standards. Guys, this is actual FUD. FUD. Because they want to scare you, of course. But you have to realize that the ECB, they're not trying to protect you. They just promoted it on this live stream. Oh yeah, just the digital euro that's going to help you bring confidence and safety to our financial system. When meanwhile, this is what they want to do. They want to control you. They want to make you feel like you can't escape, especially because they literally want to kill DeFi. This got finalized. EU's controversial smart contract kill switch rules finalized by negotiators. Legislative negotiators from the EU have agreed on new rules known as the Data Act after the Web3 community raised fears. The plans, made as part of a wider overhaul of data rules governing the internet-connected appliances, have caused consternation in the Web3 sector for their vague scope and potentially fatal impact on decentralized transactions governed by what? Immutable code. The deal was confirmed by the European Commission's Thierry Breton in a tweet sent late overnight between Tuesday and Wednesday European time. The legislation is, quote, a milestone in reshaping the digital space and will lead to a thriving data economy that is innovative and open. Our conditions. That is the commissioner for the EU's internal market. While no final legal draft of the deal has yet been released, negotiators have told CoinDesk that on the text of smart contracts was tightened up from the original plans, which are intended to give people more rights over any data produced about them. With the adjustments made to the text, we are no longer addressing smart contracts in general, but make this regulation applicable specifically to the execution of contractual clauses in the context of data sharing. That suggests that some improvements to a proposal that the EU Commission made in 2022, which like automated programs linked to the exchange of data, should include kill switches that allow them to safely be terminated. This is again wishy-washy, taking information and wanting to delete it, which is the whole point of why we have DeFi and why we have the blockchains we have in general, because there's transparency there. That if someone does something and takes a loan out on the blockchain, you're able to see all of it. You can't just delete this information. It's not clear whether the final deal will assuage concerns and will prove unworkable for the public. Permissionless blockchains where there's no central actor or to implement regulatory structures. Again, this is what they want, and they also have MiCA, which is set to take effect in 2024, which offers a license to crypto exchanges and wallet providers to operate across the block. This is all about control. Why are they doing this? It's clear. They say on their website, they're doing this because a digital euro would provide an anchor of stability for our money in the digital age. Christine thinks that we will collapse and not make it if we don't have her to help save us. Dave Digital is in the chat. What's up? Okay, hold on. I'm getting this will load eventually. Hold on. This will load eventually. There we go.
Where do we stand? We central bankers, we have been operating as a monetary anchor in relation to the commercial banks and the private money. If we are not in that game, if we are not involved in experimenting, in innovating in terms of digital central bank money, we risk losing the role of anchor that we have played for many, many decades. And we have historical examples of period where the central bank monetary anchor was not there, and that precipitated crisis after crisis. That certainly was the case at the time of the free banking in the 19th century. Do we want to go back to those days? Probably not. I would say certainly not from our vantage point, as a result of which we have to respond to the demand for those digital payments in order to maintain the role of anchor that we have been playing regularly.
Christine says we will go into crisis if we do not have central banks being in control of our money. I don't think El Salvador is in crisis right now. But again, what is all of it about? It's about control. It's about control. Let's hear one more clip of our jolly Christine. What's going on, Christine? What is going on? All right, well, RIP Christine. There we go. We got it. We got it. We got it. Hey, I love the smirk that she gives when they bring up Bitcoin. Christine, What is going on? Well, let's move on. Here she was saying that there needs to be control over payments. If you spend your money how you want to spend your money, then you will not be able to, and you will actually be thrown in jail, which is pretty wild. Jimmy, is it smoothie time yet? I wish, man. I wish. Either way, we know CBDCs are horrible. CBDCs are the end of our freedoms. We have 3 inalienable rights: life, liberty, and property. What the European Central Bank wants to do, what all central banks essentially want to do, is take all of those freedoms away with the central bank digital currency. Because again, it's used as a surveillance tool. Every single transaction you make will be watched. Every single transaction you make will also be through a trusted transaction processor. Who is that, may you ask? Well, that's a normal question. I'll tell you, the central banks. So if they don't like you, they don't like where you live, they don't like where you visit, they don't like that you bought too much steak this week, or you flew too many times in 1 month to go on vacation with your family, that's not allowed. Every single thing you do, every single right you have will be taken away by a CBDC. On top of that, they want to promote kill switches. They want to kill smart contracts, delete information, which is why we love Bitcoin so much, because it's truth. Every single transaction is on the blockchain, an open distributed ledger that anyone can take a look at. It promotes freedom. It promotes unity. It promotes prosperity of every individual. Anyone with an internet connection, and not even an internet connection, can jump in and start transacting, sending and receiving value, money with Bitcoin. That is why they're scared. Because anyone, they can't control Bitcoin. They can't shut down all the miners in every single part of the world. It's just not possible. That's why they want to promote a digital payment, a CBDC. Don't fall for it, guys. We know the truth. We understand what it means to be our own bank and to have our freedoms, to own our value, to have property that can't be taken away from you. Why are we talking about Gatorade baths in here? And what flavor would it even be? Orange, the yellow one, the blue one, the red one? What is going on? Lee, nice to see you. Can't wait to send MTC a CBDC instead of LTC. Listen, other miner, I can't take it anymore. We're going to fight. We are going to fight. Bacon X and hashtag give me crypto or give me death. Okay, so in terms of Gatorade baths, we're going to have orange and yellow Gatorade baths. I mean, those are like kind of my favorite flavors. I'm not going to lie. So Hellraiser said, we left England because taxation without representation. Yup, exactly. And that's what a CBDC does. They're going to do like a carbon tax, a fee on just taking a walk. Like this is insane. This is insane. Kenny-O, LOLing in the chat. Yeah, man. Yeah. John Legend, nice to see you. Crypto Allah. Why buy Bitcoin? Why buy Litecoin when Bitcoin is the better version? Listen, man, you need more than just Bitcoin. In my opinion, you need more than just Bitcoin. And Litecoin is a faster, cheaper, easier to use Bitcoin. Joe is flipping out right now. Why are you flipping out, dude? Memory man, non-violent, non-participation. Yeah, listen, Bitcoin, you don't need to fight anyone to defend Bitcoin. You don't need to fight wars to maintain Bitcoin's dominance like you do for fiat. It's not how it works. Bitcoin, anyone can opt in, and that's what makes it so beautiful. Andrew, nice to see you. Is that the Canadian Andrew? All set miner. You hodl BTC and gain LTC. Listen, man, I'm trying to stack that Litecoin, dude. I'm trying to stack it, and thankfully the other miner gave me two of those today. So maybe after the third, I'll say his name. I can't. I feel like I'm trolling the other miner too hard. I feel bad when I say things to him. K9MM came here just in time for a rant. Yeah, you did, dude. Yeah, you did. I ranted a lot today. I played Chirpow. It was a crazy stream. We had another big piece of news happen where there was another reason to be your own bank, guys. We have to stop trusting these exchanges. You have to stop trusting these other people that are custodians. Guys, why did we leave TradFi? I will rant right after this. I will rant. Smash these likes. Let's get 150 likes. Nevada files to place crypto custodian Prime Trust into receivership. What happens here, my friends? Nevada's Financial Institutions Division filed to take over crypto custodian Prime Trust and freeze all of its businesses. The regulator announced on Tuesday. The move comes mere days after fellow custodian BitGo called off its bid to acquire Prime Trust and follows a Nevada cease and desist order, which alleged Prime Trust was near insolvency. Tuesday's request for receivership states that Prime Trust owes its clients north of $85 million in fiat and has about $3 million in fiat currency on hand. The company owes a further $69.5 million in crypto, an interesting number, and has $68.6 million in crypto on hand, the filing says. The filing said Prime Trust was also operating with a $12 million equity deficit. Part of this shortfall comes from Prime Trust being unable to access legacy wallet, the filing said. This is pretty suspect, my friends. Prime Trust entered an agreement with Fireblocks to have the latter company manage its crypto assets, which was completed in 2020. In 2021, after Prime Trust saw new management, it set up legacy wallet forwarding for wallets that were either on Fireblocks' platform or set up to forward to wallets on Fireblocks' platform, the filing said. However, in December of 2021, Prime Trust, quote, discovered that it was unable to access legacy wallets or crypto held in those wallets. It is understood that from December 2021 to March 2022, to satisfy withdrawals from the inaccessible legacy wallets, Prime purchased additional digital currency using customer money from its Omnibus customer account. Prime is reported to have been making efforts to regain access to the legacy wallets. However, as of the date of this petition, Prime has been unable to do so. So they basically lost the keys, is what they're saying? Fireblocks communication head Gabby Hu told CoinDesk in a statement that the legacy wallets were all controlled by Prime Trust and none were held by Fireblocks. After Prime Trust became a Fireblocks customer, new management made a decision to deposit Prime Trust customer assets in old legacy wallets. Once management moved those assets to the legacy wallets, the customer's assets were not recoverable. These legacy wallets were not Fireblocks. Prime Trust management and any receiver who takes over will have full control of any wallets maintained by Fireblocks. They declined to comment, but the company's condition will only progressively worsen as customers continue to withdraw. Both Trust and FID requested the receivership attributed to the Nevada Commissioner Sandy O'Laughlin indicated. The filing also asked for preliminary injunctive relief, saying that it would be in the public's interest that there is a threat of immediate irreparable harm. The petition asked the court to appoint a receiver to take over the day-to-day operations of the company and thoroughly examine all of its finances to determine the best option to protect Prime's clients, either by rehabilitating and returning the company to private management or by liquidating the company. In the meantime, the filing asked for a court to ban Prime Trust as well as its officers, directors, stakeholders, and others from disposing of any of Prime Trust's assets or conducting any transactions. According to an affidavit signed by O'Laughlin, Prime Trust and FID both agreed that former Bank of Nevada CEO John Gordy, Meadows Bank Director Paul Huygens, or former Meadows Bank CEO Arvind Menon are also qualified as possible receivers. Exhibits attached below show that Prime Trust board and interim CEO all signed off on the petition. Very interesting, but what happened to your friends? People trusted someone else. Why are we just sitting here and allowing people to hold our money? Why did we leave the traditional financial system? Why did we say to the banks, goodbye, banks, goodbye? We left the traditional financial system. We ditched the banks because we understand that we have to be our own bank. We cannot trust anyone to custody our funds anymore. The whole premise of Bitcoin is to be a decentralized peer-to-peer electronic cash system. Why are we not embracing the fundamentals of this space and going and saying, hey, I'm going to take my fiat currency and exchange it for a digital currency like Bitcoin and put this digital currency in my wallet so that way I actually own it and I could spend it, receive it, and do whatever I please with it. But no, people put near $70 million in crypto into Prime Trust and said, hey, you guys hold the keys. You guys hold my crypto. No worries. I am sorry, but you guys cannot do this anymore. Stop leaning on someone to hold your hand, because that's what this is. You saying, hey, I can't trust myself to hold my own keys. Please hold my hand. Just walk me through the park. Walk me across the street. Just hold my hand wherever I go. Please. No, we're not doing that anymore. Don't let anyone hold your hand. Hold your own hand. Give yourself a hug and be your own bank. Store your own value. If you guys haven't realized, the banks are still having issues. Even Jerome Powell was saying, the banks are struggling a little bit, but they're fine. The banks are struggling. Look at the regional bank ETF. It's still down. Look at the banks themselves, their stocks. They're down over 70, 80, 90+% from the highs of the new year. People are taking their money out of the banks like wildfire, except they don't put it on the news. But we know what's going on. We understand that the banks could go down. And then they will come for crypto because it's money that is freedom money. Anyone can use it, transact it, receive it, send it. So while they'll go to all of these companies that are holding your private keys, holding your Bitcoin, and subpoena them to take your crypto, and you will be left with nothing. Just like when the banks close their doors and they shut off all the credit cards because they could easily do that, then you won't have anything left. The only people that will have anything left will be the people that have their crypto in their wallets. Sheesh. Flat Smack, I do think we should give each other more hugs. Yeah, Ozzy, listen, man, they don't want us to prosper. They don't want us to prosper. That is it. That is it. John Legend, what's up with the mug emoji, the sheesh emoji in there, as you should. As you should. Bitger33, nice to see you. Nice to see you. Hope you're doing well. Lando, welcome to the stream. Lando. Wait, this is Lando from TikTok, right? We like Lando from TikTok. MetaMask, what's going on? Let me see. How many likes do we have right now? How many likes? I'm going to check how many likes we have right now. It is another way to control the people. And it's really unfortunate that we even have to deal with this, that we have to watch out for a Cbdc and make sure that we don't get all caught up in the madness.
Preaching the crypto gospel.
Thank you, Armani, for your $5 super chat. Yard for Armani in the chat. Thank you. Yes, I will always preach the crypto gospel. I will always make sure that, again, we are talking about the fundamentals of this space. Other Miner says, finally, a super chat. It's all good. It's all good. You guys support me a lot. And I do appreciate any supers that come through, especially the Other Miner gave me some 2 Litecoin today. That made me very happy. It was kind of like a highlight. Yeah, I really do love the Litecoins. But you know what? The fiat currency, you spend the fiat currency, you are making sure you hodl your crypto and you spend your fiats. A depreciating asset. Why spend an asset that could appreciate in the future instead of something that's actively depreciating as we speak? Patrick DeMar's jolly. Yeah, the Litecoin does make me jolly. Jolly, jolly, jolly. My friends, we had some news today, but I know this was an 1.5-hour stream. It's a long stream. I just want to talk about FTX first before we head out because if you guys didn't know, Sam Bankman-Fried was actually trying to get out of all of these charges. And finally, we have some new news on the situation. I will bring that up for you guys. If you guys remember the other day, uh-oh. Oh, I guess I am back. Okay. Almost had an oopsie there. Almost had an oopsie. I thought we were going down. I thought we were going down again. So we have Sam Bankman-Fried, FTX. You know, FTX has been talking all of the smack possible, trying to sell all their assets behind the scenes, recovering billions of dollars, yet who gets any of it? That's a great question, isn't it? It's a great question. Did my stream rug? Am I not good? Okay. No. We are good. Okay. FTX debtors recovered $7 billion. And it's been extraordinarily challenging because they spent money on absolutely everything but what they should have been spending money on. If you take a look here, it says the exchange still falls short of the $8.7 billion that they owe to their customers, but they recovered a cool $7 billion. But it's unclear whether it will go to the customers at all. If you remember, the IRS also filed a $44 million claim against FTX. So they will get the money, the IRS will get their claim, their money before the creditors and before the customers. So the people that are trying to protect us aren't protecting us. Side note. And again, unclear whether that $7 billion will go to the customers. They have fiat currency stablecoins that were commingled. They were spending money on real estate at $240 million of real estate in the Bahamas. They were also able to transfer $2.2 billion of commingled funds. John Ray they're paying as well. And they also paid his brother, another organization, a few billion, I think $1 million as well as $100 million in donations between SBF and FTX executives to political figures. FTX pauses a sale of $500 million stake in AI firm Anthropic per Bloomberg. So more things they're trying to liquidate, but it seems like it's not successful. Bankrupt crypto exchange FTX has paused the sale of its highly coveted $500 million stake in AI startup Anthropic, according to a report from Bloomberg. Perella Weinberg, the investment bank handling FTX's bankruptcy, told bidders this month about the pause. People familiar with the matter told Bloomberg. The move followed months of bidders' due diligence on the stake of the creator in ChatGPT rival chatbot Claude. FTX and sister hedge fund Alameda had invested $500 million in Anthropic, according to internal documents. Semaphore reported in early June that FTX was looking to sell its shares for hundreds of millions of dollars. Anthropic raised $450 million in a Series C funding led by Spark Capital with anticipation and participation from Google, Salesforce Ventures, Sound Ventures, Zoom, and others. According to the earlier June report, Anthropic was valued at $4.6 billion. But some of that is going to head back to SBF and FTX, maybe. Or they'll just keep it there and use their customer funds or cash it out and still give it to the IRS, maybe. SBF trying to get out of all these charges. The judge rejected SBF's motions to dismiss criminal charges. The federal judge overseeing FTX founder Sam Bankman-Fried's criminal trial denied his pre-trial motions to dismiss criminal charges against him, writing that the exchange's founder did not have standing to dismiss any of these charges and did not meet the extraordinary circumstances for dismissal. Bankman-Fried, who faces wire fraud, bank fraud, operating an unlicensed money transmitter, bribery, and campaign finance charges, filed to dismiss the bulk of these charges last month across 7 pretrial motions. After a court hearing earlier this month, Judge Lewis Kaplan, of U.S. District Judge for the Southern District of New York, denied 3 of these motions. On Tuesday, he denied Sam Bankman-Fried's motion to dismiss bank fraud, money transmitter, campaign finance, bribery, wire fraud, and other fraud charges. The judge's 41-page memorandum details his reasoning for rejecting the 4 remaining pretrial motions to dismiss, addressing questions of venue and whether prosecutors have alleged valid property right claims in bringing fraud charges. Quote, the Second Circuit has deemed dismissal an extreme sanction that has been upheld only in very limited and extreme circumstances and should be reserved for the truly extreme cases, especially where serious criminal conduct is involved. Kaplan also previously allowed Bankman-Fried and prosecutors to sever 5 of the 13 charges brought against the one-time FTX CEO, setting a March 2024 trial date for those charges. So he just keeps getting pushed. SBF argued that the Bahamas had consent to charges brought post-extradition, an argument that a Bahamas court agreed to prior to this month's hearing. The judge noted that Bahamas had not objected to any of the charges yet, though a renewed motion might be filed if that changes. They're trying to get saved from every angle here. SBF recovering billions of dollars, yet it's probably not being given to anyone. He's still probably playing League of Legends on his mom's phone because as of I last checked, they didn't have the surveillance on his parents' devices. Meanwhile, who is he living with? His parents. Property in their names, in his parents' names, in SBF's name, all over the place. But there were charges brought against him. And they previously allowed Sam Bankman-Fried and prosecutors to sever 5 of the 13 charges brought against him. And he will have a trial date in March 2024 for that. Tell me how that is fair, where there are people all over the world being arrested for a lot less. Madoff, look at him. They wanted to cause some pain to this man. And he went to jail. He has to suffer the consequences by the media, everything. But SBF's afro doesn't even make the news. His messy hair, full of private keys and secrets, does not even make the news. If it was anyone else, it would. Again, be your own bank, stack your Bitcoin or your crypto, and make sure you have that in your wallet because you can't trust people like FTX, SBF, and the system that goes along with it. Because you cannot get your justice. Even Gary Gensler calling us in crypto hucksters, scam artists, all of these things that we're waiting outside of the bankruptcy court for our money. Yet people are waiting outside the banks for their money. Silicon Valley Bank, First Republic, and even more, trying to get cash. But no, FTX was never called out by Gary Gensler. FTT was never, still to this day, never deemed a security. Be your own bank, hedge against this system. Alexandra G, my girl out here, thank you for upgrading your membership from a friend to a zesty friend. I appreciate you with my whole heart. Please, guys, if you haven't yet, smash those member emojis and show a lot of love to Alexandra G. Thank you so much for upgrading. I really appreciate you and your support, girl. Much love. Much love. One love. One heart, let's get together and feel all right. Oh, the other miner interrupted my singing.
Ms. Custodial Karen.
Now, do I say thank you for this super chat, or do I just like keep, or do I like give you the cold shoulder, maybe do an ignore and not acknowledge the super chat and just be like, I think that would be better. I think that would be better. No acknowledgement here. No acknowledgement. I only acknowledge Alexandra G and other people that can contribute to this stream. Even the other miner, he agrees with me that the cold shoulder is deserved. I agree. No warm shoulders for you. No warm shoulders for you. I can't. MetaMask likes my voice. Thank you, MetaMask. At least you believe in me, MetaMask. No G believes in me. You guys believe in me. You guys believe in my vocals. You guys think I should be on American Idol. I get it. No zesty shoulders, Julio. No. No zesty shoulders. That would be a good YouTube channel, The Other Miner. Yeah, I guess Mike should do that. other miner. Stop being mean to me. Brothers T, nice to see you. Amazing vocals from No G. See, that's what I count on right there. Your encouragement. Thank you guys so much. I appreciate every single one of you. I just keep hearing like all these voices in my head. I feel like I keep hearing like Christine from the ECB. I feel like I keep hearing Garrett Gensler calling me a huckster, a scam artist. Powell saying the banks are struggling, but the banks are fine. I don't know anymore, guys. I feel like I'm losing my noodles out here. I just know that I have to keep calm, hodl on, be my own bank, and of course, stack those sats. Be a zesty individual. My friends, if you have not yet, make sure you smash these likes, you subscribe, share the stream out with friends so people understand what happened today. Talking about the digital euro, Cbdc's, inflation, not getting straight answers from the people that they say we rely on the most. They're like, society relies on us. Then why aren't you helping society? Society needs freedom money, which is Bitcoin. We need transparency. We need privacy. We need to own our value. Keep calm, hodl on. What do I hear? Do I hear hope? Do I hear zest? Do I hear being my own bank is the best way to be? Hold on. I'm also fueled by coffee and Bitcoin? This is amazing. My friends, all of y'all, I appreciate you coming today. Oh,
Thank you for bringing love, light, and laughter to the world and the Zesty fam.
you guys, my toe almost made it to the stream because I lifted my leg. I was like, woo. I really give like a full body reaction to these things. Thank you, Guy, for your $6 super chat. I will always be positive. I will always bring the love, the light, the zest, as you say, my friend. And I will always be honest with you guys. I will always tell you what the deal is. I will always tell you the fundamentals of the space. I appreciate every single one of you. Smash these likes. Share this stream out with friends. Keep calm. Hoggle on. Fuel yourself with coffee and Bitcoin. Hold on. Do I hear good vibes? Happiness? Zest? Sunlight? Being my own bank, self-sovereignty? I'm going to the light. I see it. I see it. I hear it. I'll be back. Bye.